Hey everyone, and welcome to this explainer. Today, we're taking a massive, dense, 60-page government policy booklet and boiling it down into clear, actionable knowledge. We're going to demystify the Chief Minister's Microfinance Initiative, or CMMFI. It's a policy that reveals a huge, mostly untapped economic opportunity right now in Nagaland. So if you're an entrepreneur, a farmer, or honestly just someone looking to build a sustainable business, you're definitely going to want to stick around for this one. Okay, let's dive into this. We're going to break this whole thing down into 5 really simple steps. First, Nagaland's Agrarian Challenge. Then introducing the CMMFI solution, exactly who is eligible, the funding pattern explained, and finally, the application process.
All right, kicking things off with Part 1, Nagaland's Agrarian Challenge.
So, to really understand why this initiative even exists, we kind of have to look at a pretty fascinating paradox. Take the number 70%, for example. 70% of Nagaland's working population is actively engaged in agriculture. That's a huge majority. But despite having so much of its workforce tied directly to the land, the state still imports a massive volume of essential food and meat just to feed its own people. There is a very real, very clear gap between the sheer effort going into the ground and the actual yield showing up in local markets.
And this perfectly illustrates the core opportunity here. On one side, sure, you have this heavy reliance on imported food, largely because of fragmented land holdings and historically low investment. But on the flip side, Nagaland's agriculture remains largely organic, practically by default. Because of the region's diverse soil and climate, the state has a highly lucrative advantage when it comes to the global market for organic products. The potential is absolutely massive, but local farmers and entrepreneurs desperately need capital to actually scale up, boost their productivity, and tap into those larger supply chains.
Which brings us to Part 2, introducing the CMMFI solution. So the Chief Minister's Microfinance Initiative is essentially the missing puzzle piece here. It's a powerful bank credit-linked scheme specifically engineered to provide affordable credit, interest subsidies, and, this is huge, collateral-free loans. The core objective isn't just about handing out money, right? It's about structurally increasing your income, promoting private enterprise, improving agricultural marketing networks, and establishing genuinely sustainable livelihoods. It's really about shifting the entire state from being a net importer to a high-value producer.
Moving right along to Part 3, who is eligible?
Well, the scheme is basically built for 3 main target groups. First up, individual farmers and entrepreneurs who are looking to invest in agriculture or improve their livelihood activities. Second are self-help groups, or SHGs. Now, to qualify here, your SHG has to follow what's called the Pancha Sutra concept, which basically means you hold regular meetings, maintain regular savings, do interloaning, ensure timely repayment, and keep your books up to date. And finally, the third group is farmer-producer organizations, or FPOs. These farmer collectives can qualify if they have at least 3 years of audited balance sheets, a minimum of 100 shareholders, and a paid-up capital of at least 1 lakh rupees.
Now, beyond those specific group classifications, the baseline eligibility rules are actually super straightforward. You can't be a bank defaulter, makes sense, right? You also cannot be a serving government employee. You'll need sufficient land for your proposed project, and that can be either owned or officially leased for the duration of the loan. And finally, you have to have adequate experience or training in whatever activity you're actually proposing. It's a very clean, logical checklist designed to cut through the usual bureaucracy.
Okay. Getting into Part 4, the funding pattern explained. This is where things get really exciting.
Now, what's really interesting here is exactly how the money flows for your project cost. If you bring a viable business plan to the table, you only need to cover a minimum margin of 10%. 10%! The financing bank then provides up to 60%. And here is the absolute game changer. The government of Nagaland steps in with a 30% back-ended subsidy. That means nearly a third of your total project cost is effectively covered by the state, which drastically lowers your personal financial burden and your overall risk.
But wait, it actually gets better when we talk about interest rates. So for fresh KCC or Kisan credit card loans, if you're a prompt payer, the central government already gives you a 3% interest subvention. Under CMMFI, the state government stacks an additional 4% subvention right on top of that. Combining those can literally drop your interest rate down to 0. Plus, the scheme offers a massive stress reliever, a 6-month moratorium. That's a grace period where the state government actually pays the interest for you during those first crucial months while you're still getting your business off the ground.
So, what about the elephant in the room? Collateral. It's the biggest hurdle for almost any new entrepreneur. Well, under this initiative, micro and small enterprise loans up to 10 lakhs are mandated to be completely collateral-free. The beneficiary leverages the central government's credit guarantee scheme, and the Nagaland government steps in to completely remove the financial friction by paying the 0.37% annual guarantee fee directly on your behalf. So you're protected, the bank feels secure, and best of all, you don't have to mortgage your family home just to start your business.
To put this into perspective and make it really tangible, let's talk real numbers from the policy's Scale of Finance Annexure. These are actual business examples and their tentatively approved budgets. You could be looking at 13 lakhs for setting up a provision store, 9 lakhs for a bakery, or just over 1.3 lakhs for a pig rearing and fattening unit. And the policy covers almost 90 different specific business types. Everything from hydroponic farming and cold storage units to graphic training centers and homestays. The scope here is incredibly vast.
All right, final section, part 5, the application process.
So how do you actually get started? The government has mapped out a really clean, chronological journey for citizens. Step 1, you just register online at the state's dedicated credit portal. Step 2, you generate your detailed project report, or DPR, right there on the platform. Step 3, the bank conducts their due diligence and field verification just to make sure you're a serious applicant. And Step 4, your verified application goes straight to the district-level committee for final approval.
And let me just pause on Step 2 for a second, because this is great. You do not need to go out and hire some expensive consultant to write your business plan. The credit portal actually has a built-in generator that lets you create your detailed project report digitally. You literally just fill in specific fields detailing your fixed capital assets, so things like machinery or vehicles, your working capital needs like raw materials and wages, and your projected sales details. The system then automatically generates a professional report that is completely ready for submission.
Now, once the bank gives your project a thumbs up for financial viability, you'll meet the District-Level Implementation Cum Monitoring Committee, or DLIMC for short. This committee is headed by your local deputy commissioner and includes district heads of various departments along with bank managers. They're going to evaluate your experience, your skills, and your overall business plan. They really want to see that you understand your revenue stream. So when you reach this stage, you absolutely need to bring conviction to your proposal.
And just a heads up, they take this screening very seriously. Consider this real-world data from a DLIMC meeting held in Waka District back in January 2025. Out of 226 applications received, 80 were sanctioned, but 85 were flat-out rejected, with others either withdrawn or still processing. I think this perfectly proves that while the money is absolutely flowing to viable projects, the banks and the committee are strict about filtering out non-serious applicants. It's a true merit-based system designed to celebrate real sustainable success stories.
Now, as with any government policy, this explainer is strictly for informational purposes. While we've distilled the core mechanics of the CMMFI for you today, you know how it goes. Rules and scales of finance can and do update. So be sure to head directly to the official Nagaland credit portal at credit.nagaland.gov.in to confirm the finer details for your specific project and to verify your exact eligibility.
So we started by looking at a state that imports what it eats, despite having all the land and the people to grow it themselves. The Chief Minister's Microfinance Initiative fundamentally removes the biggest barrier to fixing that, unaffordable capital. It provides the heavy subsidy, it basically kills the interest rate, and it removes the collateral requirements for serious entrepreneurs. The capital is sitting right there, waiting. The global demand for organic, local products is waiting. So the only real question left is, what will you build?